Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Another down day for the markets. It's a 124-point cut on the Nifty. Defensives are doing well, but the bank Nifty continues to put pressure. So does the broader markets today. That is a theme that continues. 3 continuous days of red on in our stock markets.
Absolutely right. Ahead of the all-important Fed meet today, what we're actually seeing is quite a bit of a sell-off. Dow yesterday was down for the 9 straight sessions, and Indian markets too seeing quite a bit of a sell-off, largely driven lower by the PSU pack. But we have quite a lot lined up on the show. Let's start off with the top headlines. Markets slipped after a firm open. Nifty sensex down over 0.5% each. Utilities, PSU banks and metals are the key drags, even as healthcare and pharma notch up some gains. Mid-caps lag.
NMDC is under pressure after sources tell CNBC-TV18 that the Karnataka government may be looking to increase duty on iron ore. The state contributes nearly 35% to the total mix of the company.
Wartech Wabag under pressure after a 2,700 crore order from the Saudi Water Authority gets cancelled. Stock recovers from the day's low after the management tells CNBC-TV18 that Saudi Water Authority wants to recalibrate the order size and scope, and the company will participate in the reverse tender.
Shoppers Stop climbs in trade after a 3.4% equity worth 236 crore rupees changes hands at 628 rupees a piece in a block deal window. Sources tell CNBC-TV18 that Amazon.com NV Investment Holdings LLC is the likely seller.
GE Shipping under pressure after the management tells CNBC-TV18 that tanker freight rates have been weak due to market fundamentals. Stock down nearly 3%.
Okay, all right. Let's quickly take a look at the markets. The low for the day today was 24,149. We've recovered around 50 points from those levels, but still very close to breaking that 24,200 mark yet again. As Vivek was pointing out, the all-important Fed meet, that is something that we'll be watching out for. The mid-caps continue to be under pressure. Bank Nifty, second day continuously, we are seeing some pressure come by from the PSU space. Yes, there is recovery all across, but it is not as sharp as the fall has been since morning. Defensives continue to do well. We have the Pharma and the IT index in the green right now. Pharma in the Nifty pack and the broader markets continue to do well. So that is a sector to watch out for sure. FMCG did make a recovery, but again, that index is absolutely flat, but with some negative bias, Vivek.
You're right. The only pocket, in fact, I think a bit of strength is actually the Pharma pack. Like you mentioned, Pharma index up over 1%. Names like Dr. Reddy Sibla are holding that particular pocket of the market quite strong. But we will now have Pharma standing at the wall. This is our special segment, Midcap Movers. Pharma will take us to the midcaps that are buzzing in today's trading session.
Well, the markets may be choppy, but today is a session that belongs to the new listings. All three of them have had a very, very good debut on Dalal Street, regardless of how the market has been. Take a look at this. MobiKwik had a 60% premium to its IPO price, is now up 80%. Vishal Megamart, a 30% premium, now up 40%. And Sai Life Sciences takes the cake because it listed around 18% higher from its issue price, is now well up almost 40% from the IPO price. Some of the stocks that are not doing well, though, in today's trading session are the PSUs, and NMDC, after CNBC-TV18's news break, is down 6.5%, almost about to turn negative for 2024. REC, HUDCO, HAL, almost every stock in the PSE index currently trading with losses. Pharma is a segment that is bucking the trend, as you guys just mentioned. Concord Biotech is up 5%. Mankind Pharma 2, best day in around 3 months. Aurobindo 2 building on the gains from the morning, 3% higher there as well. Stocks that are doing well on the back of strong volumes in today's session, and EID, Parry, KPR Mills, Bharti Hexacom makes an appearance here, 7% higher, and Radico Khaitan too trading with healthy gains on the back of strong volumes. And lastly, some other stocks that are bucking the trend in today's session include the likes of Action Construction and as well as Supreme Industries, both at the highest point of the day, gains of 3% each. Back to you guys.
Okay, some interesting names there. So there are some gainers in a market which is otherwise looking very weak. But it's a good time to get Sudeep Shah for a technical check on the markets. He's joining us from SBI Securities. Sudeep, third day running, we are seeing some cuts. Do you think we could see some recovery, consolidation, or this could be the trend for this week?
Good afternoon, Sonal. Good afternoon, Vivek. Sonal, what we are eyeing, Sonal, what we are seeing in the last few days is that Nifty, despite that Friday's move of 400, 500 points from the lower levels and closing around 24,750, 24,780, the index has not been able to cross or sustain about 24,800. And last 3 days, we've seen formation of lower top, lower bottoms, and it has been an all-round selling pressure. The pockets, specifically banking and IT, which were leading the rally in the last 15 days in the recovery course, they also have faltered somewhere. So here we feel that now the markets could enter into a period of consolidation, maybe between 24,000, 23,950 on the downside and 24,500 on the upside. This is a wider range, but this could be that consolidation band. And from an extreme short-term perspective, now 24,350, 24,400 will now become an important resistance, being the 20-day exponential moving average. And on the downside, we are eyeing supports closer to 24,050, 24,000 zone. Now here 24,200 as well as 24,000 strike prices puts both have the highest open interest. So maybe a retest of 24,050, 24,030 followed by a rebound is what we are expecting right now.
Right, Sudeep, so what are your individual picks for the day? Any long or short calls you're giving?
There are a couple of them. The first one is from the pharma space, which has broken out today. That is Mankind Pharma. Now, Mankind Pharma has been in a longer term uptrend. In the short term, if you see in the last 15-20 days, the stock was consolidating between 2,550 and 2,700. And today there has been a breakout packed with volumes. So we expect the stock to head up to 2,850, 2,900 in the next couple of weeks. The stop losses for the same can be kept at 2,700 on the downside. The second stock that we like is United Spirits. Now here too, there has been a breakout after say a 40-45 day consolidation period. The overall trend looking at the weekly and the monthly charts is quite strong. From the short-term perspective, there was a consolidation and now we are witnessing a breakout. So we feel that from the current levels, United Spirits can be bought with a stop loss of 1,550 on the downside and a target of 1,630, 1,650 on the upside.
Okay, all right, Sudeep, thank you so much for joining as always and giving us your technical picks. But as we slip into a break, here's some good news for you viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Welcome back to Midcap Radar. Well, the sell-off as far as the broader end of the markets is now intensifying. A couple of stocks that are now trading near the day's lowest point. First up is Pyramid Enterprises. Some cautious commentary coming in from the management at the latest City conference. On the back of that, stock down almost 5%. And the other stock, one stock that was doing quite well in yesterday's trading session is PVR. But today, down almost 5%. Again, this particular stock now trading at the day's lowest point. But moving on, Shoppers Stop is in focus on the back of a block deal. Nimesh is here with more details.
Hi Vivek, so there was a large block in pre-open in Shoppers Stop. I understand from sources that Amazon was a seller in today's block. They own close to 4% and they've sold their entire 4% stake. So it's a clean out trade as far as Amazon is concerned. In terms of buyers, the large part of the book was built by the domestic mutual funds and some FIs as well. But it's largely dominated by the domestic mutual funds. If you look at the shareholding pattern, the promoters own 65%. It's largely owned by the mutual funds. The MF put together own close to 22%. So that stake will further go up. And FI is on close to 700%. For records, Amazon had bought this 5% stake in Shoppers Stop way back in 2017. And at that point in time, they had played close to 180 crores. So now for this 4%, they've raised close to 280 crores. So they've not made a lot of money in this. But for records, Amazon has completely cleaned out now. They've sold their entire 4% stake in Shoppers Stop via block deal today.
Okay, all right. That explains the move on the stock as well. Thank you so much for joining us with all those details, Nimesh. Let's move on to our segment, Midcap Spotlight. Yash is joining us, focusing on Viatech Wabag. The stock has been under pressure, but there is some update here as well, Yash.
Well, that's correct. The stock has been under pressure since market opening, but let's just understand why has that happened. Overnight, of course, the company informed the exchanges that Saudi Water Authority has cancelled a tender for a 300 MLD mega seawater distillation plant. Vatek in September 2024 had won this order for the sea distillation plant, as I just mentioned, and it's a large order. As I said, 300 MLD. The order size itself was about 2,700 crore rupees. Vatek, as far as its exchange information is concerned, they've added a few points to it. They've said that the Saudi Water Authority has notified all tender participants on cancellation of the tender. So, one thing to understand is that it's not like the order has been cancelled for Vatek and is being given to someone else, but the tender itself in the first place has been cancelled. The second thing that the company said is that they are in touch with Saudi Water Authority to understand and comprehend the reasons for the cancellation. We spoke to the management at Vatek Wabag, and they've also issued some clarification as far as the cancellation itself is concerned. They say that the tender, that is about 2,700 crore rupees from Saudi Water Authority, has been cancelled as Saudi Water Authority wants to recalibrate the order size and scope itself. What the company is saying is that they've been informed that Saudi Water Authority is likely to float the tender for the same contract in its recalibrated fashion and invite bids again in the next couple of weeks. Also, Vatek Wabag said that it will participate when the revised bids come in, as far as the time period of 2 to 3 weeks is concerned. And also adjoining, the management has said that they are confident of booking orders worth about 3,500 crore rupees in the third quarter of FY25 itself.
Thank you so much for that, Yash. Just to give some perspective, remember the order book at the end of Q2 was close to 14,600 crores. So this was a pretty significant order. And it'll be important to see whether, once the retrending happens and if the company wins, whether the management can go ahead and get the order inflow target of close to 16,000 to 70,000 crore that they had guided the street for. But some important clarification there. Thank you so much for joining us and giving us to that, Yash. Let's now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. The pressure on the markets, that has increased actually. The Nifty is now down 160 points and the mid-caps are down 0.8%. When we started the show, it was down around 0.7%. So some more fall from the highs, though still we are not at the lows of the day yet, but Nifty is below that 24,200 mark for now. Let's move on and address some specific stock moves. Ambuja Cement has announced the amalgamation of its subsidiaries Sanghi Industries and Penna Cement with itself. Street sees the merger in favor of Ambuja. Nigel is here to explain to us about this new change. Nigel.
Well, that's right. Ambuja Cements has two subsidiaries. One is a listed, one is an unlisted company, among others. And they've announced that they're going to be merging both these two into Ambuja Cements. So the listed one is Sanghi Industries, the unlisted one is Penna Cement. Before we get into further details, let's tell you the rationale. They're looking at simplifying the group structure. And that's the core purpose of this. And that's more or less read positively by the street. So the timeline that they've given is around 1 year odd. That's provided all the regulators give the go-ahead. Now, the ratio is most important for this, right? So, for the listed entity, you have Sanghi Industries as well as Ambuja Cements. Now, those who hold close to around 100 shares of Sanghi Industries will get 12 shares of Ambuja Cements. You put in the math, and as of yesterday's close, well, it was at a discount of close to around 11% for Sanghi shareholders, and they'll be getting the Ambuja Cements shares. So, in that case, it's negative for Sanghi Industries shareholders, while for Ambuja Cements, it's seen at a longer-term positive. So, both these two are in focus. But the other one that we highlighted earlier this morning as well was, since ACC is the other subsidiary of Ambuja Cements, you should keep an eye out on this one. Why is that? Because at some point of time, they look to simplify the structure, right? And maybe fold up ACC as well as into Ambuja Cements. However, going by this ratio that they have given, it appears the ratio will be in favor of Ambuja. And that's why even ACC is down 2.5%. So, merger could be underway. But if the merger takes place, then still you'll be tilting to Ambuja Cements. So among all of them, the street prefers to play it via Ambuja Cements because it's a longer-term positive. Back to you guys.
Thank you so much for that, Nigel, and giving us all of those details as far as that particular merger is concerned. Well, moving on, let's now get you an CNBC-TV18 exclusive. We learned from sources that Karnataka government may be looking to increase duty on iron ore. Sudarshan joins in with more details.
What we understand from sources that Karnataka government is likely to increase the iron duty, and that announcement is expected very soon because draft has already been circulated. What I understand, that draft was circulated few days ago. One stock that has been in focus, obviously you are seeing that in the last 30 to 40 minutes the stock has fallen. The stock was flat before our exclusive. Now it's down almost 6%. So the reason of this fall is because of total mix for NMDC. Karnataka forms nearly 35%. That's the reason that stock is under pressure. Another stock that might be under pressure is JSW Steel, because these are the two stocks that are likely to be impacted the most because of this if government goes ahead and increases the duty further. Now, recently in the latest order, as per the latest order, Supreme Court on the current royalty had already announced that government can tax it retrospectively, and the date was given 2005. So from 2005, the taxes can be done retrospectively. So because of all these reasons, but major reason is increase in duty that government can announce very soon. That is Karnataka government.
Thank you so much for that, Sudarshan. You know, it's an important development that you're picking up from your sources, both NMDC, JSW Steel, and the other guys who are using iron ore as input are seeing selling pressure. So, whole host of steel stocks are names like JSPL, Tata Steel, SAIL, all of them are seeing selling pressure today. Well, a couple of other stocks to keep on the radar. Have a look at some of the private as well as PSU banks. Have a look at Federal Bank. That particular stock has seen significant selling pressure in the session today. The Nifty Bank down 1.3%, Federal Bank down over 4%. Have a look at names like PNB, have a look at names like Bank of Baroda. All of them are seeing significant selling pressure. Vatek Wabag, you know, the one stock that Yash just told us about, seen a bit of a recovery from the day's lowest point after that important clarification that Yash explained to us about. But, you know, again, it's still down 10% on the back of that significant order win cut. Some of the other stocks that are seeing selling pressure, look at the auto pack, very weak Vahan data, so names like Tata Motors, even some of the auto ancillary names like Bharat Forge, also names like Hero Moto, Bajaj Auto, all of these stocks are now at the day's lowest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.